Now, new data shows active investing is gaining ground on passive investing. CNBC's Leslie Picker has more for us. Hi, Leslie.
Hey, Wilf. According to Morningstar, 48% of active U.S. stock funds beat passive indexes in the year through June. That's up 37% year over year. But passive vehicles are still becoming increasingly dominant. Passive has now taken over almost half of the stock market, according to Bank of America, and that's caused hedge funds to build up the credit side of their business. The CIO of Sculptor told us earlier today that's why they've been growing credit to be more than half of their $33 billion in assets under management.
Particularly on the credit side, that's really hard to replicate, as you say. So within the world of opportunistic credit, there's not an ETF that can work a company through a bankruptcy process or work a company through a liquidation of assets. So within credit, we try to focus on things where what we do, hopefully, we'll be able to have an edge in for a long time.
Sculptor's up almost 10% this year and has seen inflows into credit and outflows from their multi-strategy fund, guys.
How does this relate in terms of performance, Leslie? Have we started to see good enough performance to justify the flows?
On the credit side of their business, absolutely. And on their real estate business, absolutely. Multi-strategy has just been a tough strategy overall. It's kind of feast or famine these days across the multi-strategy world. Multi-strategy oftentimes invest in various different strategies in their underlying. For Sculptor's case, they do have about $8 billion in equity investing that they, of course, are kind of wrapped up in that whole difficulty surrounding equity investing in the hedge fund world right now. So credit, especially since you don't really benchmark that against the S&P, has been drawing more inflows and has been a standout among their credit peers at Sculptor.
Leslie, thank you. Shares of Sculptor up 8%. Stephanie, your thoughts on this? I mean, especially the last couple of weeks, all the volatility we've seen got to have been a little tougher.
I mean, I hope active beats passive because that's obviously what my book is and that's what my company is all about. But I think you definitely need to see sustainable performance, outperformance of active versus passive. And that's just starting to happen. So if that continues, then I think you can get momentum. You also need correlations to come down because you can't have every sector go up every single day. So you don't have to be a stock picker, right? So I think that actually is happening, but I think it's going to be a slow process over time. And I think you need less competition from private equity.